Hi everyone, if you're wondering where the market is heading this year, what the stock market is doing, and what's going to happen with the interest rates, then you'll definitely want to hear what my guest has to say, so stay tuned. Hi everyone, I'm Oriana Shea with the Oriana Shea Group in Long Beach, California. We are a real estate firm and we are also all about giving back, which is why we like to do these informative videos for you. Today, I invited Donavan Mayes with Wells Fargo Advisors to talk about what they're seeing and hearing from the financial market standpoint. Hi Donavan.
Hello.
Welcome.
Thank you.
Thank you for being here. I know a lot of people are curious about where the market's heading. In general, what do you anticipate will happen with the stock market this year? Any significant shifts on the horizon, one way or the other? Break out the crystal ball.
Right. Well, we do think we've had quite a run the last couple of years in the stock market. So going forward, we anticipate the S&P 500 closing about 5,200 this year. It's about 4,600 or so right now. So we think there's about 10 to 12% upside from here.
Wow.
But it's not going to be a smooth ride. So we think we're going to see some ups and downs. We wouldn't be surprised if we saw a 10% pullback, 10 or 15% pullback.
Really?
So, may see a little bit of a drop off here, but then higher highs.
Okay. So no reason to panic, just ride the lows through and, just understand that what goes up has to come down and it's going to level off.
Right. I mean, we've had, like I said, we've had a very good run the last couple of years. So pullbacks are natural, they're expected, they're actually almost a good thing. So if we do see a pullback, you're always going to want to see what's going on, why the pullback, but everything that we're seeing right now, we do expect something, but we do expect higher highs. Okay,
great. Do you think the Fed is going to raise interest rates 3 to 4 times in 2022 as predicted? We initially heard that Goldman Sachs anticipated the Fed raising the rates 3 times. Now we're hearing rumblings of 4 times.
Yeah, we are. So, and it's been changing, more recently with the numbers coming out on employment looking a lot better, inflation being high. That's the talk. So investors are anticipating more rate hikes more recently. Wells Fargo's forecast is 2 to 3 rate hikes in this next year coming up, but that could change. But right now, that's it. I mean, it went from 2 rate hikes later in the year to maybe 2 to 3 mid-year. Now it's looking like it's definitely going to happen the first half of the year, and it might be as much as maybe 4. So.
Yikes! And it's all about slowing down inflation and.
Slowing down the economy and inflation. The GDP, we have gross domestic product coming in about 4.5% next year, which is pretty good. I mean, it's the largest economy in the world, so anything over 3%, you start wondering a little bit. You want to slow it down a little bit because of inflation. Inflation numbers are high, came in at 7% here recently. We think that's going to taper off towards the end of the year and next year once we get supply channels updated and things like that. So.
Okay, great. If you were going to give people one financial tip for 2022, what would it be?
One tip. Well, there's going to be a little bit more volatility, right? So be ready for that, kind of like what we just talked about. The one financial tip we have for everyone is usually stick with whatever your strategy is. So if you're an all equity investor and you've seen some good returns over the last couple of years, don't try to time the market. Don't try to get out now and get back in when it's down a little bit. It's very hard to do, number one, and we found that people, typically don't do it, and it's hard to do. They maybe do it once and they think they're the greatest and try to do it again, and it's hard.
So work with what you know.
Stick with your strategy. So whatever you put together, whatever your strategy is, stick with it and stay with it. I don't think it's time to reassess it when things are down.
Okay, great. So what other questions are you getting asked the most right now?
We often get, what should I do now? Where should I go? What should I do? And it kind of falls back into kind of what I said earlier. We got to have a plan. What are we trying to accomplish? So once you know what you're trying to accomplish, then it's a lot easier to get a plan together. So we would say get a plan, stick with it. Our philosophy is that stocks is where to invest over time because you're going to do better than inflation, along with real estate. Real estate is certainly something that we think is a big part, it should be a big part of everyone's portfolio, because over time, we found that real estate and stocks have done better than inflation over time, so you're going to have some better purchasing power.
And that was the question that I meant to follow up the interest rate question with. How do you see the interest rates going up impacting the real estate market?
Well, if interest rates go up, which we are expecting that to happen, we think the Fed, as I mentioned, is going to force the short-term interest rates up, which usually follows with long-term interest rates. So as interest rates start rising, affordability is going to have a problem, right? I mean, if you're paying more for your loan, then you're not going to be able to buy as much of a house, right? So that might affect. So with interest rates, how interest rates would affect housing would be with interest rates, in our opinion.
Right, and that's what we try to, we keep telling people, don't wait for, this supposed prices to come down. And the inventory is so low, and there's no indication that anything is going to happen with the inventory. And if interest rates go up, and prices keep going up, you are inevitably going to be paying more for the same property.
Right. Try and time the market, right? I mean, same thing.
Crystal ball.
Right.
Crystal ball. I wish I had one.
Right.
Well, this was great information. Thank you so much for being here, Donavan. Really appreciate it.
My pleasure.
I hope you found this informative and helpful. Please share your comments down below, and don't forget to like and subscribe. Bye for now.